This is Broke Money Hustle. And now, here's Broke Money Hustle with Traco and Eric.
Hello, everyone. This is Broke Money Hustle. I am your host, Eric. My co-host, TJ, is out for the moment. I'm hoping he pops back in before too long. But for right now, I am flying solo. So do bear with me as I have a couple of things that I want to get into. But first, I do want to say that I, nor my co-host when he's here, are financial advisors. That means please do not do anything based on the stuff that we say or speculate about. We're just here to learn. We're learning right alongside you. We're not experts in any of this stuff. We're just trying to stop doing the things that we've been doing our whole lives, which are poor people things. Not saving money, not investing money, not having our money work for us, working for it, working too hard for it, and spending it too easily and letting it kind of fall through our fingers. That's not what rich people do, or should I just say wealthy people? People that have some money, that's because they have it working for them. That's because they have multiple hustles. They don't waste the day in front of the TV. They work several jobs sometimes if they have to, and we're no different here. And that's kind of how life is at the moment in this crazy, crazy structure. For those of you who don't know, a little bit about my background is I'm an artist, and I have a whole art career that was sidelined by the thing that should not be. And due to that fact, I kind of had to start reintroducing myself, reinventing myself. And part of that was getting a financial education. I'd always kind of seen the writing on the wall that the dollar itself was fiat here in the States. All currencies, all paper currencies are fiat currencies right now. Historically, they don't last, but I really didn't have any of this type of information. So I started on a journey in YouTube, mostly, looking up and trying to learn as much as I could. And I stumbled across a video series by Mike Maloney. He wrote the Gold Silver book a few years back. And he walks step by step through the history of money, currency, fiat currencies, in other words, really makes the relationship between the dollar and gold and what people in power have done for generation after generation. They've taken the gold, they've taken the silver, they decided to remint it in different coins and mix in a little nickel, mix in some copper, and then they would just dilute the currency with more and more of these common metals and less of the precious metals that had an intrinsic value. And at that point, their currency became worth less and eventually worthless. Therefore, their government fell, their currency structure fell, and something new had to take its place. And I firmly believe, as he does, and as many of the luminaries that I have been introduced to on Twitter and on YouTube who play the market, who trade stocks, who do options and futures, and who buy cryptocurrency and who buy gold and silver as hedges against the inflationary aspect of unlimited money printing. And that's what the federal government is doing. The Fed, the Federal Reserve, which isn't federal and it isn't a reserve. It's basically a bank that's run by bankers. We don't know exactly who they are, but we kind of get an idea that they're probably the heads of all the major banking institutions. They own stock in this company that they've created, and they manipulate currency, they manipulate things to enrich themselves. And part of getting a financial education is part of learning what currency is, what money is, the difference between the two, why gold and silver, and some would argue Bitcoin, is money, and why currency like the paper dollar is not money, and its time has come. And there's a lot of things that are in the news right now that are red flags to this, and I'll touch on a few of those here. And I just want to point out in the comments for the video on the YouTube channel. Here are some links. You can join Robinhood and get a free stock, which is a great way to start buying stocks, buying ETFs, dividend stocks that pay you a little bit to hold the stock. And or you can sign up with Webull. Webull is probably what I would say is the next tier after you've gotten used to Robinhood. At least for me, I moved on to Webull because there's more charts, there's more information, there's more DD called due diligence. And really, due diligence is learning about the various companies that you're investing in, knowing what you hold. A lot of people will get into, say, something like a penny stock, for example. And one of the people that I follow, Yates Investing on Twitter, basically said there's a lot of people who are trading right now who shouldn't be trading. And you get that idea from people who get into it. They buy, let's say, they buy some shares in a company for pennies on the dollar. It's a penny stock, it's like 60, let's just say it's 60 cents a dollar, 60 cents a share. So you put in $100, you're in it for $60. For 100 shares, you're in it for $60, and the stock tanks. It goes down 3 cents, it goes down 5 cents. Well, as we've discussed with my co-host, there's a tendency to panic sell. FOMO sets in, fear of missing out. Fear of missing out works both ways, positive and negative. So the fear comes in that you're going to lose all of the $60 that you put in for those 100 shares, which you still own 100 shares no matter what the price is. But then you panic sell and you lock in those losses instead of looking at it as an opportunity to buy in more if you believe in the company. And some of the stocks that I work with that are in my Robinhood and my Webull portfolio, they've done just that, and I have refrained from panic selling because I believe in what the company's doing. Now, I've kind of changed the idea of my investments a little bit. I'm doing much more heavily in mining stocks. And if you get a chance and you're on YouTube, I want you to look up a gentleman by the name of Mark Moss. He's an investor. He's a money guy, public speaker, guru type person. He does a really good basically like a 3-part video series talking about owning silver mining stocks and why the mining stocks are a much better investment than even the physical. Well, you should hold some physical. By all means, please hold some physical. I do, and I think you should too. But the mining stocks. So let me give you an example. I'm going to bring up one of the mining stocks that I've been into this one for a little while, and that is Fortuna Silver Mines. Okay, and where is my screen share? Boom. All right, so now if you're on with me here on the YouTube Live or on Facebook Live, you can see Fortuna Silver Mines is at $7.29, up today about another 0.69%. Up about a nickel today from its previous day's outing. And if I look back into my, where is my Robinhood account? I don't want that up on screen. And if I go into, I'm looking at my portfolio here on another screen. Fortuna Silver Mines. I want to just kind of break down where I'm at in this stock and kind of give you an idea of where you can take this lesson in wanting to look at mining stocks. And excuse me, as my voice isn't the greatest, as you've probably noticed. So every once in a while I have to clear my throat and I'm hitting the mute button each time. So it might sound like there's a bit of a disruption in what I'm doing. I usually try to hand things off to TJ. Okay, so my average intake for Fortuna Silver Mines is about $4.50 a share. And if we look at the current price, which I now have back up at $7.28 a share. So I have definitely increased. I have a total return of about 40%, almost 41. Today I made another $11 on this investment. And what's driving mining stocks is once a mine has a certification that, yes, there is money in the ground, the value of that mining stock explodes, and it encompasses everything that is potentially in the ground, and what they're able to already dig up and produce. So when you invest in a mining stock, say a smaller one, I think there's one called Great Panther Mining I'm looking at, GPL, I believe is its stock ticker. That's around 88 cents a share right now. But let's say that Great Panther, you buy 100 shares of Great Panther Mining at 88 cents a share. And on one of their mines, maybe even it's a new mine they've opened up, they find a whole bunch of cobalt, a whole bunch of nickel, lithium, the batteries in these EV vehicles we all love and cherish, Teslas, they need these hard metals to produce the batteries for them. And that is a huge mining operation. And I don't want to get into it really, but if you look at the devastation of the environment for coming up with environmentally friendly electric vehicle batteries versus a fracking pipe in the ground, you're going to see a lot more forest and greenery around the fracking pipe than you're going to see around the strip mine for the lithium or the cobalt. Most of these mines are down in third world countries, places like Brazil, Mexico, Argentina. There's a lot of mining operations down in there. Canada actually has a lot of good mining. And Canada's not a third world country yet, but there's a lot of great mining stocks up there and mining companies that operate not only in Canada but abroad as well. But most of the mines are in foreign countries, like like in African countries, for example. Now, the downside to that type of investment, this is something that Mark Moss hit on that I didn't realize, is that the country that the mine resides in, under some despotic dictator, could just decide to seize it. And what's the company going to do? It's not like they can fight back against that. So those are some of the risks involved. But you stand the chance to make a more solid return on your investment with stocks versus just the physical. Now, physical silver, my gosh, I got the JM Bullion site up, and this is one of the places that I've purchased from. And let's take a look at the current price. So silver is at $24.71 an ounce. When this tragedy, epidemic, the COVID thing started happening, I started buying some silver here and there, and that was around $16, $17 an ounce. So it's already really appreciated quite a bit. Gold is at an all-time high, $19.49.84 an ounce. And then these are the ask prices. These are what are known as the spot prices. So this is the hard value of the commodity as it came out of the ground. Now, when you go to buy a coin, you buy premiums. So let's say I'm buying a 1 ounce gold coin, which I would love to buy another 1 ounce gold coin, but starting to get out of the price range here. So currently, a 1 ounce gold coin will set you back $2,049.80. So I'm not the greatest with math, but the premium here is about $88, I think, maybe $100. That's all that you're paying for. You're not paying $2,049 for this 1 ounce gold coin. You are storing $1,900.49, $19.49.81 worth of value. You're storing that in hard currency, hard money, gold, and you're paying a premium to do it. and a coin that is backed by a government. In this case, this is the U.S. government Liberty Gold Eagle coin. And so your premium is what you're paying to get that coin. That's all you're actually paying. The rest of it is a store of value. And as I've seen with my own coins since I bought them so long ago, they've already appreciated beyond the premium that I paid for them. Like, especially with the silver, because the silver is growing faster than the gold's been growing. And it's starting to shorten the difference between what they call the gold silver index. How many silver coins does it take to equal 1 ounce of gold? Historically, that's been around 15 ounces of silver to 1 ounce of gold. Gold's run away because of the monetary policy. Silver's been underappreciated, so it widened and it was up to like 120, and now it's down to around 80. So 80 ounces of silver to 1 ounce of gold, for example. And these are mostly just round numbers. I'm just kind of going along with it. But so anyway, that's kind of the point that I wanted to make early on in the program about investing precious metals. You can do it in stocks. You can do it in mining stocks. Those are pretty much, we have a segment on here usually with TJ called Date, Marry, Kill. I'm dating a lot of mining stocks, and I haven't killed any of them yet. In fact, I went back to Northern Dynasty Materials. I had sold that one and made a small profit, and realizing with some more education about the potential for mining stocks to bring you much more reward than a traditional stock, I started back into Northern Dynasty Materials because they're sitting on a gold mine, a literal gold mine, and some other new research and stuff that's coming out. If you look up the company, is very, very promising. So I think once the general public gets an idea about this, the general stock trading public gets an idea of this, and once they make some announcements, I think August they have when they have to report their earnings in August, I believe. I may be incorrect on that. It may not be Northern Dynasty. It might be another one. But anyway, once they report those earnings, they're going to report the stuff they pulled out of the ground. You could have a shoot up. You could have it go to the moon, literally. But anyway, the biggest news of the weekend is the dollar apocalypse. And this comes from Zero Hedge. And I highly recommend that you follow Zero Hedge. Don't believe any of the spin surrounding this. This is an aggregate site. They pull news from everywhere, and it's generally not the best of news. There are usually 3 or 4 news cycles ahead of the game. Like I'll read a story, for example, I'll read a story on Zero Hedge. Maybe it has to do with riots. Maybe it has to do with gold and silver, the bankers. That won't, if it makes the news, like the mainstream news at all, it probably won't happen for upwards of a week. That's just the nature of news cycles and 24-hour cable news and all that crap. They prioritize the wrong things because they want to train you to think a certain way. They're only giving you the information they want to give you. So by the time it hits, this dollar apocalypse might seem like news to some people still. They don't realize the dollar is depreciating. And right now, according to the latest trends, it's at its all-time low since 2018. And it's getting whooped up on by everything. Bitcoin just got past 10,000 US dollars per coin recently. It's on its way to 11. It's very close to 11 right now. And that's been pumping. And gold has been pumping. The dollar is sinking. We've seen this type of stuff happen before. 2008, the big bailout. The American people aren't happy with bailouts. Globally, nobody's happy with bailouts. We don't like it when the government picks winners and losers, regardless of whose government it is. That's not capitalism at all. And that is the wrong way to go about things. And that just creates a bigger problem, bigger bubble ready to burst. So, look for this article on your own. Just go to zeroedge.com. You'll find it. But there's a lot of charts showing comparisons. Like this is a good one here. Spot gold price in relation to the Bloomberg Dollar Index. So you can see when the dollar was high, gold was low in spot price, and now they've switched. So this trend, this is what we were looking to see happen. This trend right here, where they've switched. So the speculators out there thinking gold easily to 3,000. I think that's very much a possibility. Some people are going as high as $10,000 an ounce by this time next year. I don't know if that'll happen or not. There's a lot of monetary decisions that need to be made in the meantime, and whether or not banks, banks are getting to the point where they're hiring people in cryptocurrency markets. People from Coinbase are getting jobs. Software engineers getting jobs at banks now. You're going to see banks start to launch their own coins. We're already seeing hints of this with places like Visa, for example. So there's a move to a digital dollar. There's a move to it being crypto blockchain backed. Any government, any banking institution behind crypto coins, it's going to be centralized. They want to track you. They want to know what you're spending your money on. They're now offering ledger services to where, they can start buying this and getting into your portfolios. That's just starting to trickle in now. So we're not too far away from mass adoption, I think, in crypto space. There's a few hurdles need to happen. I think Bitcoin's going to need to stay above 10,000 for a long time in order to get, in trading, there's certain walls, certain price levels that people speculate that they need to get past in order to make a new achievement and continue going upwards. So we've been looking at certain cryptos in my ledger. XRP, for example. XRP is a banking coin. This allows banks to talk to each other and provide instant liquidity. It's a software thing. It's not an actual coin. That's a lot of this crypto stuff is. It's Internet 3.0. So I would liken it to, if you're somewhere around my age in your 40s, go back to when you were a young kid, explain to your grandparents what email was, what the internet was, and why they needed an email address. That's the conversation that we're having as adults with everybody else about cryptocurrency. It's the next leap forward in the internet. Decentralized domain names are a thing now. You can get a .crypto, .zil. You can use those to get paid back and forth instead of the long blockchain addresses for your Bitcoin wallet, for example. You can just have somebody pay you at whatever .zil, whatever .crypto. That makes things simpler, easier to do. So definitely look up some of these things that I'm throwing out there. Do your own due diligence, do your own homework. I'm not claiming to be right. I'm stumbling around on a lot of this myself, trying to learn these things as myself, because this is emerging technology. So I want to try to be in the front of it. I want to learn the mistakes of the past. When I first learned about domain names, I didn't go by happy.com. I didn't go by, embrace.com or some other, contrite words that we might not think about. But now people who have owned those for several years are flipping them for six figures because the internet is our livelihood. Well, Internet 3.0 is decentralized blockchain technology. Different coins, different tokens. Those words are interchangeable, basically. Those are different types of technology. So like I said, XRP, that's a banking coin, banking token. It allows liquidity transfers between institutions, countries, currencies instantaneously. So, and whereas Bitcoin is more like a stable coin, a store of value, it's like digital gold. It doesn't have any other powers other than that. Ethereum, for example, I own Ethereum. I own one Ethereum coin, one full one. I don't own a full Bitcoin, but I do own one Ethereum coin. Ethereum is basically the language, the programming language that almost all crypto is based on. And you can write programs with the Ethereum blockchain. You can make video games in the Ethereum blockchain. I believe the domains, the unstoppable domains, for example, that's all Ethereum blockchain stuff. So this technology is here. It's here to stay. There's enough big money adopting it quietly now. Major hedge funds like Paul Tudor Jones, for example, they've been getting into it quietly for a little while. JP Morgan, for the longest time, stood against it, but quietly they were meeting with Coinbase CEO. So this is in the works. They're going to spring it on us at some point and say, hey, This is the new digital dollar. You have to have it. The old dollar is no more. So if you're hoarding physical cash, please take that physical cash, go to a coin shop, buy some gold coins, buy some silver coins with it, turn it into something real that'll still be real after the paper is gone away. So, all right, I want to switch off of my little soapbox there to some other things as well. Here again, this is CoinDesk. This is a good website to get news on cryptocurrencies. Start your education here, maybe. Bitcoin is at 10,843. Ethereum is at 322. This was $150 when I bought my first Ethereum coin. So that's a good appreciation of value. XRP still at 22 cents. I've seen it as low as 19. I bought it at 20. It's been at 22 for the longest time. 22, 20, 23 is what it's trying to break. Chainlink recently went up. There's some controversy around that I don't want to get into because I don't understand it fully. But it went from a $3 to an $8 down to $7. It's like just under $7 now. Bitcoin Cash is a derivative of the Bitcoin technology. That's increasing in value. That's a little more affordable entry point into crypto. So you might want to look at that. It's basically Bitcoin tech used as a focus for fungible currency, as a replacement for fungible currency. Fungible meaning you can divide it up into smaller increments. So when you make change with $1, you buy something for 25 cents with $1, you get 75 cents back. That's the fungibility of the dollar at work. Last thing I wanted to touch on, and since I don't have TJ with me, a little bit of abbreviated episode. Tesla. Now, Tesla is one of those stocks that, gosh, I wish I'd have bought it at $700 a share. But when you're new to trading, you look at something like that, you're like, $700? My gosh, that's so overvalued. There's no way there's any money there. It's too expensive. And yet, what's Tesla trading at right now? $1,700 a share, I think. Okay, so it's $15.39. It had gotten as high as 17 at one point, but I've just been watching this, hoping that I could buy a little bit at a time, because on Robinhood, you can buy fractional shares. Webull, you can buy fractional shares. This wasn't always a thing. You always had to buy in round shares for the longest time. So, and some things you can't buy fractional shares of, but I wanted, I wished I had the income to get it. I thought it was too expensive. Now it's more than doubled, and it's looking like they're going to be included in the SP 500. Now, this MarketWatch article here is kind of interesting, and I just want to kind of go over it with you a little bit. So what the S&P 500 is, it's Standard & Poor's index of funds. And within this index of funds, there's a lot of tech stocks. There's a lot of entertainment stocks. It's a different mixed bag. It's not quite the NASDAQ, which is pretty much all tech. It's not the Dow Jones, which is like all the old-fashioned blue chip stocks. The S&P 500 is a good little mixed bag. However, it has the FANGs. Now, this is a good term to define here. FANG stocks. In finance, FANG is an acronym that refers to the stocks of 5 prominent American technology companies: Facebook, Amazon, Apple, Netflix, and Alphabet, which is Google. The term was coined by Jim Cramer. I love Cramer. Pretty much the only reason I'd ever watch CNBC is for Cramer. He's host of Mad Money. In 2013, he praised these companies for being totally dominant in their markets. And the term FANG was used with Apple as the second A in the acronym, added in 2017. So it used to just have one A. Now it's got the 2 A's. Looking like it's going to have to add a T in there. So FATANG. So going to be the FATANG stocks. And here's why. Let me jump back to this other article. So from 1997 until about 2008, they find a stock's price would jump an average of 4.7 to 4.9% from the day before the index announcement to 5 or 21 days later. So this is talking about what happens to a stock once it's part of the S&P 500. Because being added to the index isn't a great thing for most stocks. And it references a paper from a university guy, several university people. analyzing 20 years of history of stocks being added into the fund. And they found that since 2008, increases declined markedly to 0.6, 0.7%. In fact, when the same period is elongated to 1 calendar month after the stock is added to the index, the stock sees a decline of 2.1 to 2.3 in the period since 2008. In the 1997 to 2008 period, prices increased from 2.2% to 2.4. So, and there's some more to this. Again, that's up on Market Watch about Tesla being added in. Basically, what they're saying in this article is that when a fund gets added into the S&P 500, its growth slows. Now, if it's a FANG stock, that's not happening. And Tesla is not your run-of-the-mill stock. In fact, it's as dominant as Amazon is right now in terms of its growth. And just looking at I had one up here. Well, I lost it. But I had a link originally where I was talking about the performance of FANG stocks both in and out of the S&P 500. So if you take the full S&P 500 and you look at its growth, it's incremental. It's small. It's like 35%, I think, was the most current numbers I could find. Whereas if you just took the FANG stocks out, their growth was 400%. So their growth, even though they make up only 12% of the S&P 500, their growth is exponentially more than the S&P 500. They're outperforming the index that they're part of. And according to this article I was going over here about Tesla being added in, saying that the trend for stocks is to decrease and slow down as they're added into the fund. But what the FANG stocks have done is kind of boost the S&P 500 artificially. Like if the S&P 500 didn't have those FANG stocks, you wouldn't be getting that 35% return. You'd probably be getting much lower. And those apart from themselves. So it's going to be interesting to see what happens to the S&P 500. You can buy the S&P 500 as a fund, as a share itself. I think you're out like $300 a share of the S&P 500. So you're getting small bits and pieces of all of the funds in the index. But going back to the numbers, if you were to just take that money and invest it in the FANG stocks by themselves, you would have had a 400% increase over a 35% increase in your money. And with Tesla being added into the fund, I think it's only going to make matters worse in terms of the exponential growth of the S&P 500, which is still a good thing to get into. But if you want those big numbers, just buy Tesla, just buy Netflix, just buy Amazon. But they're overvalued right now. I mean, that's the thing the sobering thing about the market is it's artificial. The Fed is pumping money. The Treasury is pumping money. They're just printing and handing each other bonds, which are just fancy word for an IOU, back and forth with these bond swap things, so they can print more money. The money's not physically being printed, really. It's mostly like 90-some% of it is just numbers in the ledgers of banks, giving them the liquidity, the artificial liquidity to loan money out to you and me. And that's how this turkey is turning. And it's not going to keep turning for much longer. So that's pretty much all I had for the show today. Like I said, I'm watching my mining stocks. And I'll just give you a few names here of some of the ones that are in my portfolio. Let me get up my Robinhood portfolio. Where are you? There you are. So, of mining stocks that I am in Fortuna Silver Mines, as we've already gone over. Let's see, I am in McEwen Mining. Stock ticker on McEwen Mining is MUX. So let's take a look at MUX. This was a recent purchase for me. Currently trading at $1.75, $1.45. I bought in at $1.33. Not much. I don't have very many shares. It was just kind of what the change was left in my Robinhood account. I bought a couple of shares, but I bought it to watch it. It's in there so I can watch it. So that's one that I'm looking at currently, and that one was up today. Seven, almost 7.5% up today. Northern Dynasty Materials, NAK. This one is down today. $1.66. Currently trading on it. PLM has had some good days. It's currently down for me. It's at 61 cents as my average cost. Currently trading at 54 cents. Flirting with 55. Polynet Mining. This is another one where it's like a good place to get into the mining stock. This is a relatively cheap mine, and Polymet looks to be a supplier of cobalt. Cobalt is needed in batteries for EV. There's connections with Tesla. So this is an example of a stock where we're just pretty much waiting for an announcement of, hey, we hit a new cobalt deposit. Hey, we're buying cobalt from Tesla's buying cobalt from this company that they're partnered with. And yeah, that 54 cents won't last for long. So that's a good mining stock to get into. I recommend doing your own due diligence. Look it up, learn about it. Some of the other ones that I'm in is, of course, Fortuna Silver Mines, and then GDX, VanEck Vectors Gold Miners ETF. So this is an exchange traded fund. And so what this is, and that is GDX is the stock ticker there, GDX. Trading at $44.14. My buy-in was $33.90. It's been a good return for me. They track market cap weighted index of global gold mining firms. So it's an index fund that is looking at lots of different gold mining firms. The fund is made up of a bunch of different gold miners. So this is a good way to buy one share of something and cover your bases in gold. And this has just been a good slow grower for me, and I'm fine with that. Do not be a flash in the pan trader, especially if you're new to trading. You know, if you buy these things, you're buying them as an investment. You're holding on to them, knowing that, you know, as gold goes up, the gold miners are going to go up, the silver miners are going to go up. All of that stuff is, you know, it's going to keep appreciating as long as the dollar keeps getting printed. So anyway, a lot of long-windedness for me. I hope this was informative, but please, I stress, do your own due diligence. You know, look up this stuff, see if it's right for you. Don't risk more money than you can afford, but please start paying yourself. You know, if you can save $10 per paycheck, take that $10 and go buy some silver with it. You know, one of my non-sponsors, they're not a sponsor at all, wish they were, but one of the products I used is Glint Pay. And I'll bring that up right here, Glint Pay, GLINTPAY. There is a referral link in the description down below. I don't get anything for the referral. They don't have a really cool, they don't have any sort of cool program like Webull and Robinhood do, where I get a free stock if you get a free stock and you sign up. No, what Glint does, though, Glint gives you a debit card. And this debit card is hooked up to gold that you can buy. You just hook up your debit card to it, or you can use the bank account information. They have routing numbers for their US-based bank. You can use the routing number to transfer out of your JP Morgan, Citibank crap. You know, because here's the deal. With Glint, you're basically becoming your own bank. I put a little bit in at a time. You can buy fractional gold. You don't have to worry about saving up to buy a 1 ounce coin, because literally, if you get into the coins, you have to buy an ounce. Otherwise, you're paying super high premiums. I was looking at these fun little 1 gram bars, both of silver and of gold, because, you know, apocalypse scenario happens. I need some gold to spend. You can just snap off a piece of these 1 gram bars to use to pay for them. Well, I am not wealthy at all. We're working poor, paycheck to paycheck scenario. I'm a blue collar, less than blue collar type guy. And so I can only squander away what I can squander. And the premium price for those special products is so much higher than just 1 ounce. So like for 1 ounce of gold coin, my premium's like $80. Let's just say, I know that's not accurate, but we'll say it's $80 for the purpose of simple math. So that $80, I'm spending $80 to gain 1 ounce of gold, which is going to appreciate. It's always going to be worth something. Even if it were to go down in price, it's still a solid holder of value. Now, pardon me. In order to get 1 ounce worth of 1 gram bars, you're looking at upwards of $200 for the premium or more, depending on the specialty product. So that puts it out of my reach. With Glint, you can buy those fractional shares of gold, pieces of gold. Now, I don't know how they're tracking it. It's backed by Lords of London, so there's insurance there. It seems to be legit. I've done as much due diligence as I can on the company. It seems like a great thing. Bloomberg gives it the thumbs up. CNBC gives it thumbs up. If they've got these other Paytech Award winner 2018. So it's been around for a little bit. But anyway, it allows you the opportunity to buy fractional amounts of gold. And I've just seen the value of the gold I bought with this go up and up and up. Now you see this MasterCard here, if you're looking on screen, they give you this MasterCard in the mail. And in the app, you can have US dollars or whatever your currency is. And you can have gold. So you'll transfer into Glint Pay your US dollars. Then within the app, you buy the gold. There's a small premium in there. It's a low premium. And then you get that amount of gold that you've purchased. Well, I've put in, just for the sake of simple math, let's say I've put in $100. I've seen quite the return on that investment. That $100 is now worth like $150. And it's just grown. So this is a good way to buy real money, to get real money, turn your fiat dollars into real money, so that worst case scenario happens, there's a run on the banks. People can't get money out of the ATMs because there's no money to get. You know, banks don't have to keep a lot of cash on hands anymore. They don't have to hardly keep any. That was a new rule that the Fed let them have. So if we have a worst case scenario, you may not even be able to get your money out of the bank. It may just go poof and disappear. Putting it in here instead of a traditional savings account, you'll have a debit card that you can go to the grocery store. You can spend the gold. If you amass enough, you can request that they send it to you physically, and you can put it in your safe. So it's just a great, easy way for people in our situation who can maybe only afford $20 at a time. That $20 is going to appreciate just as much percentage-wise as if it was $200. So please give this an option. Like I said, there's a link in the description so you can get the referral from me. I don't get anything for the referral. It's just something that they have in there. I wish they did, but they don't. But I believe in it. And please do your own due diligence, do your own homework, look them up as a company, and see if it's right for you. Anyway, and so this has been Broke Money Hustle. Thank you for checking us out, and we'll see if Tesla becomes another FANG in the SP 500. In the meantime, learn about Bitcoin, learn about gold and silver, and like I said, do your own homework, do your own due diligence, and see if some of these stores of value are right for you. Thank you, and we'll see you next time.
This is Broke Money Hustle. And now here's Broke Money Hustle with Traco and Eric.